depending on how you want to define what the profits were, it's somewhere between $3.5 billion loss between the two carriers, or $1 billion. But anyway, they're big numbers.
And what was achieved?
Very little. If you look at it, tiny movement in market share, maybe a percentage point or so from Qantas to Virgin. A lot of money lost, but no real change in the fundamental position.
Okay, so they finally stopped it. So let's talk about Virgin's results. What do they really show?
They're a bit scary in some respects, because I think we all knew both carriers were going to lose money. The Qantas number was slightly, 100 million or so below the level that people expected, so it was a bit better than expected outcome. The Virgin number is actually quite surprisingly large, and I think what people didn't perhaps factor in was the scale of the losses both in the international business, and we knew Tiger was losing money, but it's actually lost a lot of money. So the international business lost 67 million at the EBIT level, and Tiger lost, or their share of Tiger's losses was 46 mil, which implies that Tiger itself lost 77 mil. So they're big numbers for a relatively small airline.
Now, is this the sign that John Borghetti got the strategy wrong?
Not necessarily. I think when John came into that business, whatever it was, 3 years ago, it was a low-cost carrier with a big exposure to Queensland, so it's basically a resort airline, and it left it very vulnerable. So he's taken it up market, he's diversified, he's been quite successful in winning a much bigger share of the lower end of corporate and government travel. So he's now got 25% of his revenue coming from corporate and government, which is higher yield and more consistent sort of revenue. Certainly he's put a huge investment into upgrading the product, so it's a much better product than it was. So far, however, the financial benefits are yet to be seen.
And how deep will those pockets continue to be for Virgin's owners?
Well, it's interesting because today, alongside the losses, Virgin also announced the sale of a 35% stake in its Velocity loyalty program, which has about 4.5 million members, to Affinity Private Equity. It'll generate $336 million of cash, but no profit on the book value. And that looks, it is in effect a capital raising. Right? So it'll infuse cash into the balance sheet, add to the liquidity, reduce their gearing. And you'd say, well, why would you do that? I mean, Qantas looked at doing the same thing, looked at a partial sale of some equity in their frequent flyer program. They looked at whether they should do private equity, they looked at whether they should do a trade deal, and they looked at whether they should do an IPO of a part of it. Ruled out private equity because the Canadian experience says it's not a good idea. You end up ripping off your customers and destroying the program. The trade sale, well, that wasn't going to make a lot of sense. The IPO was the one they looked at seriously and decided that the business was too valuable to them to actually, and they didn't need to. They'd come to the conclusion that the outlook was better. So the fact that Borghetti's selling 35% of it, what's a pretty interesting looking business, without generating any profit on it, says that perhaps that was indeed the cash. Remembering that he's now got all these big strategic airline shareholders, Air New Zealand, Singapore and Etihad, on his register and in his boardroom. And then Air New Zealand said it's going to have to equity account its share of Virgin's results. I don't think any of them want to either put more equity in or have to account for losses of this kind of scale going forward. So there will be discipline in the domestic market because there has to be. Neither of them can afford these kind of losses going forward.
So does that mean putting prices up?
It means not putting any more capacity into the market. The market grows generally at somewhere between 3 and 4% per year, the demand for airline seats. So if you just stop adding capacity, over time the yields go up anyway because you're flying full of planes. It may mean some price increases. They will get the benefit, both groups, of the abolition of the carbon tax, which has cost, Virgin said today, $100 million over the last 2 years. And they haven't been able to pass that on because of the capacity war. So there will be some things that help without having to increase prices. But you'd assume if there's less capacity being dumped into the market, prices will strengthen.
Does John Borghetti have that time for those capacity stability to flow through?
He has no choice. And because the external settings will be more stable, and certainly in the domestic market, and if Qantas is right and the international capacity growth rate drops from 9.5% last year to something 2.5% this year, some pressure will come off there as well. Plus, both of them are running massive cost reduction programs. Borghetti's in the midst of a 3-year program to reduce his cost base by 400 mil, and by 2017 by $1 billion. Right? So if those are effective, and so far both Qantas and Virgin have been stripping out cost, that will help as well.
Steve Bartholomeusz, thanks very much.
Thanks, Jackson.